Hey, Sam, Kenny Simpson here at the Simpson team. Thanks for joining me today on this quick session. I really want to dive in and jump into the person that's watching this video. Hopefully is looking to buy a home. Maybe they got some refinancing, but they're insecure. They're having an issue and it has to do with their credit. And I was like, who can I have on to spend 10 minutes, 15 minutes to go through? I want to get pre-approved, but I'm stuck at this credit issue. So Sam Parker, CEO, owner of mycreditguy.com. Thanks for your time. Thanks for coming on.
Yeah, thanks so much for having me. I appreciate it. And anytime that I can get on and kind of work with like minds who want to help good people get into homes, but also just let people know it's not that bad. You haven't murdered anybody, right? Like it's nothing that crazy. You just have some dings on your credit. There's a plan that is going to put you in a position, the best position, to get a home loan with Kenny and his team, and we can just go over it. It's not a life or death thing, though. So people just need to relax a little bit, come up with a game plan.
Yeah. So before we jump into the questions, can you just give, and why I think people know is I think there is a lot of options out there when people look online to go get credit repair. I think some people have had some bad experiences because they sign up, they pay the money, they never hear from anybody, nothing ever happens. Can you give a little bit of background just on you, your company, and kind of what somebody's expectation could be going through the process of a credit repair with you?
Yeah, absolutely. So I've personally been in credit restoration for about 19 years now, fell into it when I was young, have seen all the different ways that a company could be run, shouldn't be run, all that good stuff, right? So then about 7 years ago, my wife and I co-founded My Credit Guy, and we built it with the specific purpose of getting people qualified for home loans, not just point wise, but true credit profile wise, and then long-term create different behaviors, provide them with knowledge where this was never going to be a problem again. So that's what My Credit Guy is we're a credit restoration firm that focuses on education and long-term lasting improvement and fixes on your credit that can then be generational, that now you can turn to your kids and for the first time ever, they're not going to be able to say, well, my parents didn't really teach me and I didn't learn in school. For the first time ever, we're going to have a generation that says, actually, my parents did teach me all about credit because here's how they learned. So that's kind of the long answer of what and who My Credit Guy is we just started this thing with we wanted to do the thing that everybody claimed to do. And in doing that, that's what really made us different because you have all these big national call center companies, right? You got your I mean, I don't think I'm spilling any secrets by saying your Lexingtons, your Continentals, things like that, where people are coming to us and saying, I've been with these people for a really long time and I haven't gotten what I wanted. Well, in decoding the credit repair client or situation, what I've found over the years is more than likely these companies actually aren't the big bad wolf that they're made out to be, except for the expectations are not set correctly, right? Like, so when somebody says, I was with this company, they didn't do anything. What I know they're really saying is, I was with this company, my negative items were verified, and I didn't get a good answer after that as to what was supposed to happen. And then they just kept disputing the same item that had already been verified, right? And so then that's how we rebuilt this thing, was we said, okay, well, in a perfect world, the way that it should happen, what happens next? And so then we built this system where, yes, we'll go after the items. If it's not supposed to be there, sure, we get it off of the credit report. But if it comes back as legally validated, then we either move to getting that item satisfied in one way or the other, settlement, pay for deletion, negotiation, or we find out that's not an option, right? Or we get them over to an attorney if it really is wrong, where they can go after them. But anyway, long answer, but my point is when we built this thing, we built it in a way that actually got people back to the closing table. And then because of that, we are My Credit Guy.
What would you say, somebody watching this, if they're looking at other companies and looking at you guys, I can kind of speak for myself for me is the difference from you guys. I would say the communication from you guys is unbelievable. I mean, it's phone calls, it's emails, even updating me for my own clients that I've sent to you guys. So what can somebody expect and what is the difference from your company than going to a Lexington Law or somebody else?
Yeah, so we really strive, and not to sound like we're getting too big for our britches, but we don't want to just be the best credit repair company. We want people when they get off the phone with us or to interact with us and go, whoa, like guys, we got to change a few things around here because that communication, that level of feedback or information, transparency, that is what we need, right? And so when somebody works with us, they should expect a best in class experience, not only for credit repair, but a customer service company or, a financial guidance company. Um, and I hold our people to that standard. If I get a call, and it does happen, not everybody's perfect, not even a my credit guy employee for sure, right? But if we get that call that says I'm not happy, then the question is how fast can we fix this, right? And so we realize that in 2021, user experience is a huge part. 20 years ago, you could be that gruff guy that said, you know what, I might not be the best guy to deal with, but I get the job done. And everybody says that. And that just doesn't fly in 2021. The question after all of our interactions is, how do I feel? How did that make me feel? Right. And it just is what it is. You can be mad about it or you can accept it. And it just, so once we kind of dove into that and said, all right, let's make our people feel awesome. Let's make them feel educated. Let's make sure that they know going forward, not just to pay down your credit cards, but why, and then how to implement that on a daily basis. Then we get long lasting change and that generational education that I was talking about that's so important so that we don't continue a cycle of, bad financial management.
Awesome. So somebody watches videos probably because they want to purchase a home, want to purchase a condo. They've got some credit issues. I've pulled their credit, or they just pulled theirs. They've got a 620 credit score. And you and I know if you got a 620, there's something going on. Maybe they got a medical collection. Maybe they got a collection from AT&T or Verizon. Maybe they got a parking ticket they didn't pay. Maybe they missed some payments on their credit card or their car. I know. So that's probably what people are looking at and facing. They're going, okay, I really want to get to a 700, a 720, a 680. Maybe I'm at a 550. What are you seeing on your end? Because you guys just obviously help people fix their credit all day long, every day. What are you seeing that are the common things? And also, what is a typical turn time? So somebody I'm talking to today that has a 550 that needs to get to a 580 or 620, what can we realistically tell them? How can we help them? And what's the time frame?
Yeah, great question. So in terms of the time frame, we'll always do a free review on somebody's credit report and be able to tell them within minutes, this is a 1 month fix, this is a 5 month procedure, right? And we'll be able to give them proper expectations, not only timeline, but what they're going to need to do along with what our team can be expected to do for them along the way. Most clients that need full credit repair say they need 50 to 80 points. They're probably looking at a 3 to 5 month process. You need 20, 30 points. It's probably somewhere in the 60-day or less time frame, as long as you kind of follow along and do the small things that you can on our end. But again, if you're watching this and you want us to take a look at your credit, we do it for free all day long. We'll tell you exactly what needs to happen on your credit, and then you can decide whether to hire us for the heavy lifting or if you want to try it on your own. There's absolutely no commitment there. But when I'm scanning a credit report, there's some main areas that I'm paying attention to. The two biggest factors in the credit scoring algorithm are your pay history. That makes up 35% of your credit score. And then your balance to limit ratios or your credit usage makes up 30%. So that's where my eye goes right away. And first and foremost, it goes to the credit cards. And the reason being is that is the quick hitters. Those are the things that we can adjust right now to kind of, if you're like think of it like a whiteboard, okay? And some things are written in erase marker. Some of the lines are like tape that you can peel off, but it takes a little bit of effort, and some of them are permanent. We need to do a swipe, okay? We need to just see what's actually on there and to remove the things that aren't really long-term permanent factors. Okay. So in my first swipe, what I'm looking at is credit cards. And the reason being that with simply paying some credit cards down to certain thresholds, if you know what those thresholds are, then you can gain a dozen points or dozens of points or 100 points. Like the 620 that you described, that could be somebody with no negative marks and maxed out on every single credit card they have. That could keep them out of 620. If they were to theoretically go through and pay off maybe 4 credit cards that were all maxed out, that score could jump to a 720 or a 740. There are that many points being locked up in that section of this credit scoring algorithm when no negatives are present. It's just the only negative drawing you down. And because of that, it kind of holds more weight, right? The other thing I'm looking at, so I'm looking at credit cards first, and along with that, just some points of advice. Get them below 50% of the balanced limit ratio. You got $1,000 limit, get it below 500, have it at $499. That is a significant $1 swing that can get you a lot of points. If you can, get it below 30%. And in a perfect world, you're keeping those credit cards between 5 and 10% of the overall usage. You're just doing what I call playing the credit card game. You don't have a credit card because you need the cash. You have it because you're boosting scores or because you're racking up points, but you also know when it's time to get the points, meaning like airline points and miles, but you also know how to get those points back in a fast amount of time when you're going to need them, right? So anyway, I'm spending too much time on the credit cards, but I look at credit cards first, and then I'm going back to the negative section, basically the payment history, because that's where people will lose big points. And they're the ones that are tougher to get back. And that's in late pays, collections, charge-offs, profit and loss, things like that, where it's basically not only a late pay, but how late were you is the question that's being asked. And that's where we have to go to get some points back. Were you late? No, I wasn't late. Well, then we have some work to do. We have to either do a goodwill letter where we're asking the company to work with us and to remove that late and giving them a compelling reason to do so, or we're challenging the late and saying this straight up should not be here. But I will say that I'll have people get a hold of me all the time that'll be like, hey, can you get a late removed? I really need this done. It's like, no, I can't. Like if it's recent, if it's valid, and we can't get it done with a goodwill, there is no legal obligation for them to remove it because you were late. And I do have to remind people, give them a reality check. Like, look, I'm going to bat for you, but you weren't 1 day late. You were 30 days late on this payment. So there are other places to get these points back, right? So anyway, that's where my eyes go right away is I go to the credit cards and I go to the late pays, collections, profit and loss, things like that. If there's a collection, you can always call that company up. You can try to do a pay for deletion negotiation. Don't go and just pay collections off though. That is the last point I'll make here is when you go and you just start paying collections off, it'll actually drop your credit scores because you're updating that collection to a new date of last activity. So yeah, it's kind of crazy, but those are the 2 main sections that I look at right away. And then there are 3 other sections that I kind of take a glance at as well, but I've talked a long time already.
Nope, no worries. That's good. That's really good stuff. That's the bulk of it. A couple more questions I get all the time, and I think it'd be great to address is people come to me, well, Kenny, I don't want you to pull my credit because, I went here and got this free credit report and here's this, 90-page, can you look at it? And so I think it's important is why is it important for somebody like me, the mortgage guy, to pull the credit to send to the credit guy and not from freecreditreport.com or something like that and explain. And somebody's like, well, I heard it's going to drop my score and ruin everything. And, even though I've had this conversation, can you just kind of jump into that and give me your, the opinion, the facts on that particular topic?
Yeah, absolutely. So what your potential borrowers are worried about is what is called a hard inquiry. A hard inquiry is generated anytime that financing is applied for and a credit report is pulled because of it. When you're pulling a credit report online, you're pulling from most likely a Vantage scoring algorithm source, which means that the report that your lender pulled is a FICO, so you're comparing somewhat, it's like apples to pears, not apples to oranges. But in this situation, nobody is going to lend you. The thing is, like, the Simpson team doesn't own the credit reporting company. Okay. So there's some rules that all lenders, no matter how awesome they are, have to follow. And that is, if you want to borrow hundreds of thousands or possibly $1 million through me, I need to get a look at the credit report that my end all be all bank wants to see, not the one that you really like because you were online and pulled one and it says something that you kind of like better than what you think I'm going to see. Unfortunately, it is what it is, right? Like, we don't write the rules because we're asking for somebody else's money. So number one, it's apples to pears. It's, you're looking at algorithms that don't add up and calculate the exact same. They're not put out by the same company. Even the FICO models itself, there's dozens and dozens and dozens of different FICO models that are used, and there's only the ones that are available to the mortgage lenders that are used. So it just is what it is. You have to use that gold standard of credit and quit freaking out about it, because it's going to cost you anywhere from 0 to 3 points typically to have a lender pull. And again, you're not going to get the $300, $500, $900,000 that you need for a home unless they do that. So 3 points for possibly several $100,000 is well worth it. You can get those points back by paying a credit card down by $10 most likely. But the one thing that I will say, and I'll call you out on it if you're watching because I love you and I'm going to help you, is that this is that scapegoat where people will come and they'll be like, look at all these inquiries. This is disgusting. This is why I have a 590. And I look at their credit report and I go, you don't think that the 3 collections are drawing the score down on? You think it's all the inquiries, right? And so I'll tell you this, they're not as big of a deal as you think they are. And they're not what's dragging your scores down by 10 points or 20 points or 30 points. And they're necessary. So if you're with a lender that you trust, let them pull credit. They need to pull credit. And what they're looking at is absolutely not the same as what you're pulling online.
Yeah, I guess the stupid question, but maybe obvious, if somebody decides to let 10 different lenders pull their credit within a 2-week time, that could be a problem?
Not even really, because there's a mechanism put into the scoring algorithm that says that any polls, and the technical answer is within 45 days, but we say 30 to be safe because there's a little bit of a discrepancy there. But any credit pulls, hard pulls in a like industry, and in this case, the mortgage industry, within that 30 days, that first pull is the only one that's going to register and count against the points. So while I don't encourage a lender or a client to go out and have their credit pulled that many times, if you've had your credit pulled by a big national call center company that you clicked on an app to engage with, then by all means, please have the Simpson team repull your credit, and that is not going to count against your credit score again because it's within 30 days.
Awesome. And I think one of the last things I'm hearing too is I talked to somebody, first-time home buyer. They might have went through a BK. They might have had a short sale 10 years ago and they're want to rebuy again. I say first time because they haven't owned in 10 years. They might have just had a lack of credit. And so I'm noticing a low score and they're like, you know what, Kenny, I've been taught by my parents, pay cash, credit's terrible, it will ruin your life. And I get that because they're scared of going to credit card debt, but then you go, but they have no credit. They have a 620, or some people I know, they have 0 credit report because they don't have any credit cards. They haven't had a car loan, a credit card, nothing. So let's talk about, I call it the lack of credit, and what are some things that people can do in that, instance.
Yeah, the tool that I love best is the credit builder card. It's a credit card that we actually had a little bit of input when it was being designed. So not that it wouldn't have been awesome anyway, but there are some things that were very important to our clients that were met with this resource, and that it's a $200 secured card. It reports to all 3 credit bureaus typically within 3 weeks, where a lot of credit cards can take 3 to 5 months to show up. And so it's not a fast solution, where with this thing, if somebody's like, you could end up with a no score in a couple different situations. And what a no score is, for any of you out there that have experienced this, is it's not that you have a 0 credit score. It's that you're not meeting the criteria required by the credit scoring algorithm to generate the score, right? And so what they're looking for is missing pieces. So if you've been taught by your parents, who were most likely taught by some financial guru like Dave Ramsey, who gives some good advice and some not so good advice, in my opinion, then you maybe have a student loan, you maybe have an auto loan, right? But you definitely don't have credit cards because they're so nasty. But but the credit scoring algorithm requires you to have it. So like in this situation, just adding that one credit card could not only generate your score, but your score might be like a beautiful 680 credit score, just ready to be released out of its, cocooned into a
Cocoon,
baby
yeah.
butterfly. But you have to have all of you got to play by the rules basically of the credit scoring game, right? So anyway, my point is credit builder cards, a small $200 secured card, something that you know you're going to get, that you know is going to report to all three credit bureaus, is a perfectly fine thing to have. And it's a stepping stone. You get that opened up. Now all of a sudden your score pops and it's a 680. Now you can turn around and apply for a more traditional credit card, something where you're going to get airline miles, all that good stuff. But I like to start small, get some traction going, get some wins going, and then build on those wins. The other thing is that if we're trying to help out children, if we're trying to help out spouses, we can add authorized users. And that's where you call up your credit card company, you give them my date of birth and my social, you say, hey, Sam shares in the payment of this or in the household expenses, and I want him to have a credit card. Now all of a sudden that credit history is going to show up on my credit report. And if you've had that credit card open for the last 5-10 years, all of a sudden I benefit from all that pay history. That is not the same as buying a seasoned trade line from one of these trade line peddlers. Do not do
that. So in closing, Sam, I guess it's a couple questions in one, but why is it important to get your credit fixed? And also, somebody watching this that's like on the fence, a lot of people, it's amazing. They don't have good credit, but they literally will go spend thousands of dollars on a trip, thousands of dollars, maybe shopping, but they won't invest hundreds or maybe $1,000, whatever it is, on their credit that could potentially save them so much money over time. What are they missing? Where can they go to get maybe a little bit more education if they're on the fence or like, I don't know if it's for me. Is this a scam? Is this really right? My sister and brother-in-law had a bad experience with another company. What's a good way to say, go make the decision for yourself by watching this video or doing research? What do you recommend?
Yeah. So to check us out, I would strongly encourage you to honestly go to social media, go to Facebook, go to Google. You're going to see two things. You're going to see a ton of 5 stars and you're going to see some 1 stars. You won't see anywhere in the middle. What I'll tell you is that the 5-star experiences are from people who follow our system, who come in, who are willing to do the things to help themselves and their families get into a home loan so that their kids can have a room of their own. If we're on that same wavelength, nobody can stop us. The 1 stars are from people who don't follow our process, who get some results and then don't like them and then disengage, where we had another game plan ready for them, right? So I strongly encourage you to read both, because you need to see the mentality that will not work with our system. And then you can just pay attention to our education, take whatever you want from us for free, but you wouldn't want to be a client of ours, right? And so I strongly encourage you to go see the hundreds of reviews that are out there from people just like you who were probably worried about the exact same things. Okay. If you go to YouTube and just search My Credit Guy and look for the big check mark, like what's behind me, you're going to find a ton of free educational videos that are there for you to consume at your own pace without any cost attached to them. Okay. Now, the reason that this is so important, that we're here and that we can help you with this, is because credit is honestly just as important as income in a lot of cases. So many people worry about what they can make, and they think that that is the only thing about what they can qualify for, where if you have great credit, there are opportunities that will be presented in front of you. Maybe it's just to get your own home for your family, right? But once you start seeing credit as a tool rather than a hindrance, you can start seeing things like investment opportunities. You can start seeing things like lower rates on all insurance rates. You can start seeing things that are just available to you that are not available to the 580 borrower, because when it's time to sign your name on the line, unfortunately right now, that's not great collateral, where in the future, it can be just as powerful as cash. Just in the last year, Kenny, I've been able to take advantage of at least 4 opportunities that were just sign on the line. I didn't have to put any cash up, and they're going to make me great money with just a little fix, some commercial property here and a duplex there, and just stuff like that. Where I look at it, from my viewpoint, even 15 years ago when I was in this, where my credit and my income weren't where they needed to be to take advantage of these opportunities, and money was literally just walking by all the time. I just didn't even know at the time because I couldn't see it. So my point is, once you educate yourself about this and turn credit into a powerful tool rather than something that's annoying to you, it will start paying you and your family back over and over and over again, as opposed to that old mentality of put it in a jar and bury it in the backyard.
Yeah, and I think that's great. And I think the other thing you said that's important, anybody watching this, is that when you educate yourself and you learn about this and why it's important, and you see people around you, you hear about, I got a 0% auto loan, I got a 0% credit card, I've got crazy low interest rates on my mortgage, for my house, and they're getting opportunities like this. I think they'll understand that when they get educated, they can also pass this down to their kids or to their grandkids or other family members. And that's going to trickle down. And I like that message that you had, because this is important. Credit is just as important as building wealth or income or anything else. Because if you have bad credit, you are going to pay a lot more in interest, and you are going to miss out on a lot of opportunities.
Absolutely. Absolutely.
Sam, thanks for the time. This has been really impactful. And, anybody on the fence, go check out, mycreditguy.com, and, us together. That's why I teamed up with Sam, is because we're all on the same wavelength. We're here to help. We're here to educate, and we can lead the horse to water, but it's really up to you to sign up, to do the work and get your credit fixed so you can put you and your family in a position to buy a home.